Guys, it's your host Aman and welcome to my channel. If you are new here, kindly like the video, subscribe and turn on notification for more video like this. So we've discussed a lot of ways you can actually combine MSNR and CRT together for you to just maximize your profit, right? So we've already have episode 1, episode 2, episode 1 talking about how you can actually use the A-shaped key level and the V-shaped key level yeah, POIs, and you combine them with your CRT candles, right? And also the second episode talks about you can actually have a breaker block model and you combine it with the CRT model as well. So the third episode talks about you can actually combine the imbalance, fair value gap and inefficiency as the case may be, and you combine them with your CRT candles as well. These are all POIs combining in combination with your CRT candles, right? So today we're talking about how you can actually combine your upper close key level, upper close key level with CRT candles. So you are leveraging an upper close key level with CRT candles, right? So basically here, we have A-shaped key level, V-shaped key level. The A-shaped key levels like this and the V-shaped key level, they are all POIs, either for buys or sells. A-shaped key levels are known for more sales and V-shaped key levels are known for more buys. So A-shaped key levels are some sort of a resistant level that when the market tends to trade to it, they becomes a resistance level and tends to sell from there. The V-shaped key level has like a support level. Whenever markets come back to that V-shaped key level, you expect more buys, right? So we talked about that. So as we have A-shaped key level and V-shaped key level as a POI to leverage on using CRT for direction, right? We also have open close key level as a POI to leverage on here exactly. So open close key level are also POIs, point of interest. So what's the meaning of POIs? POIs are just basically point of interest, right? Yeah. So or area of interest, AOI, as the case may be, right? So basically here, open close key level are formed. Here they are formed by the opening and closure or closure and opening of two consecutive candles. Yeah, the gap between those candles are called open close key levels. Exactly. So what do I mean? So take a look at this. We have this candle here, this first candle here. We have this first candle here. I'm coming. You have this first candle here, the second candle here. So the closure of this particular candle here, we have this closure of this particular candle here and the opening of this particular candle. It's called the open close key level, like the open close key level. I think the open close key level is actually in a bullish scenario that when you have a opening of a candle and you have a closure on that candle, right? So here we have the closure of this particular candle and the opening of this particular candle. Still open close key level, same logic, open close key level. Like whenever a candle closes and another candle opens, that's what we call open close key level, right? So they are very common in your chart. You see them everywhere, and mind you don't really just come along and just mark a random open close key level. You are here to just know that okay, I'm working with a particular direction and I'm looking for more entries with this particular model. So you don't just come to chart and look for random open close key level, or you just look at random CRT, then you want to mark it out and you want to sell or you want to buy from it. No, you are basically trading patterns, which is supposed not to be. You are here to apply your logic and you make sure your logic is in alignment with the directional bias. That's basically what it is all about. You don't just come and be looking for entry models on 4-hour time frame or 15 minutes time frame. No, you can actually have a very nice sell setup and price will take you out and be like what's going on. Instead, you are selling where you're supposed not to be selling. That's the case. So now basically here we've talked about what open close key level are formed and what's the significance in price, right? So there tends to be a pull or push to price to upside or to the downside. They tend to push price to the downside or to the upside, as the case may be, right? So basically here, integrating CRT to his is very very easy. What do I mean? After you affirm two consecutive candles and you have an open close key level, right? The third candle has to be a bullish candle so that you can actually confirm that it's actually a pullback. Sometimes it can actually be a bearish candle, but that's not the best fit, and that's not the best fit scenario for this, because you don't know if the bearish candle is going to also have as a pullback, because it's not really giving that pullback vibe. What market is all about is just like you are trading. Market is all about expansion and pullback expands, pullback expand. So basically what I mean by expansion and pullback is all about after a break of structure here coming. After this break of structure like this, market tends to pull back, like expand again, break of structure, pull back, expand again. So this is how I'm saying exactly. So now you have to make sure that the second candle you are looking at as a CRT candle in a bearish scenario is a bullish candle. Is a bullish candle, is a bullish candle. So the second candle you are looking at to take out or to take the high or the low of the candle out is a bullish candle. So you know that okay, now this is a valid pullback in price. Exactly. So basically here we have the high of the candle here, you have the high of this candle, and we have the low of this candle. So what is a CRT candle? A CRT candle is a candle that, let's say you're actually in a bearish scenario and you take the high out first, then the next targeted liquidity is going to be the low of that particular candle. So now this makes this CRT candle valid because we took out the high first and mitigate that our POI. So this is like a driving force, or this is like a power push, pushing price towards to clear the CRT low, fulfilling the CRT criteria, right? That is basically how the logic works. You serve the previous candle high, which is supposed to be a CRT candle, and you mitigate a particular POI. Then this gives you a particular range you are expecting price to trade from and to accomplish the movement too. So I feel you understand that part clearly. So this is how they look like in charts. So price tends to move forward to the upside, then after mitigating the open close key level, then you have to break of structure, giving this particular high a strong high. So that's a strong high. Then after that, to major break of structure, then you know that okay, now if you are very much bearish, there's a change of character there, then you anticipate more sales, you look for more sales to clear out, to fulfill the CRT condition. So I feel this is actually very self-explanatory. Just go back to your chart and practice and practice and practice. It's all about practicing. Yeah, it's nobody is born with something from heaven. It's all about you going back to your chart and you say, okay, now let me find this out myself. Let me work this out myself, right? So basically, let's go back to chart and let's take a look at what we are marking out here. Let me clear out this drawing and let's proceed. So here, this is actually very much significant here. Take a look at it. If you have to take a screenshot, you can take a screenshot here. So it makes sense, right? So here, same logic with the fair value gap, the A shape, the V shape, the breakout block, same logic. But you know, sometimes you just have to get familiar with all this pattern so that you know you'll be flexible and not rigid. It's all about how dynamic, how dynamic you are. You know, you can't just be stagnant and somewhere be like, oh, if I can't see a open close key level, I can't just do whatever with what I have. If you have an imbalance, work with it. You are still following the same logic. If you have an imbalance, if you have an open close key level, work the same logic. Yeah, work with the same logic. They are all POIs, but they just present themselves in different cases. That's just the thing. So basically here, let's move to chart and let's cut all the long story short. So basically, let's move to chart and we are using NZD card here for this for today's explanation here. So basically here, let's go to NZD card on a monthly time frame. Basically, I said something on how you can actually build your bias from higher time frame, right? So using monthly time frame, using 3 months, 1 month, you build directional bias from higher time frames like 3 months, 1 month, daily, weekly. Here, after all those building of bias from daily, weekly, then you can actually use your H4 for the rejection and confirmation. You know, it's all about reaction, rejection, and confirmation. How does it react? Is it closing below? Yeah, is it closing below a particular level, or is not closing below? That's just the thing. Or is it let's say okay, now you have a A-shaped key level or a V-shaped key level. Now okay, now let's say this is a A-shaped key level and price, this A-shaped key level, and price trading very close to it. So you have to wait for how it reacts here. In this particular scenario, is it closing below or is it closing above? So that's what I mean by reaction. So if the reaction is confirmed, then that's a rejection, right? So a rejection is all about, is the candle closing below? After it's closed, then you know, okay, now let's look for confirmation from this. So basically, I said open close key level can also serve as a A-shaped key level, V-shaped key level, or an imbalance. They are all POIs. They just present themselves in a various, like in a diverse scenarios, right? So basically, take a look at what we have here. We have this open close key level here, right? Sponsoring this sell once, this particular movement, this candle closure once, right? Then you have it again. Yeah. So basically, this is on a monthly scale of NZD card. What am I trying to frame here? I'm trying to look at the last price action and I'm trying to make something out of it, right? So basically, this candle here, this candle that closes below that particular open close key level, swept all this high of this previous candle, right? Which makes more sense, right? Are you following? So now makes sense, right? So we have this candle high and we have this upper close key level, right? So now that's not where we're actually going. Where we are going here is this candle, this long wick, here, this candle is long wick, this one here. This is where we are going to. So take a look at what we have here. We have this low, we have this high of this candle, and we have this low of this particular candle, right? This is on NZD card monthly time frame, right? So let's take a look at it. So this is like a CRT candle. So we swept the previous candle high, the CRT high, then we closed below it. After we close below it, you'll be looking for more sales to clear the CRT low. That was the basic concept of CRT, right? But mind you, we have to pay attention to the 50% level of the CRT first and foremost. Then if price now trade below the 50% level, then you look for more continuation again to the downside. Because sometimes market tends to just fill up the equilibrium level and start to move in an opposite direction like this. That's why we pay attention to the 50% level first and foremost, right? So that makes sense, right? So now take a look at what we have here. Let's investigate this together. Okay, so this is on a monthly scale. We have the rejection and we have the CRT candle, right? So wherever you'll be looking at from in this second leg is going to be a selling scenario. So let's go to weekly time frame to see what we are looking at, right? On a weekly scale, we have this. Let's move this back here and let's move it like this. Exactly. So on a weekly scale, we have this. We really don't have a lot of things on the. We really don't have a lot of information on the weekly scale. Only we have all these open close key levels and these A-shaped key levels, right? Let me go back to the chart and show you. Yeah, we have those levels, right? But mind you, here we can still investigate this week on a daily scale. What do I mean? There's this saying that says a week on an higher time frame is actually a body on a lower time frame. Yeah, a week on another time frame is actually a body on a lower time frame. Just note that. So let's investigate that. We can see if it's actually a body on a lower time frame. So let's check a daily time frame to see if it's a body. So take a look at what we have here now. On a daily scale, we have this A-shaped key level here, and this also a came out level on a daily scale. If you take a look at that, that's a came out level from that level. It's a came out level, sponsoring a sell once, making it strong. But let's move this here. We are coming from a weekly level. Still the same zone, right? So take a look at this. So this makes more sense now. This is now giving us like an ABC pattern range. What do I mean? Like you're having something like this, series of movements to the upside, like this, like that. Then we add a major break of structure to the downside, making this eye a very strong eye, right? So instead of us having more sales again, we came back again and we had some engineered liquidity here, rather like a range liquidities. So these are actually like a ranging engineered liquidity, right? We have this. So then we tap here again, then we are moving to the downside as well. That's just the logic behind this. But we have a CRT candle for direction already, which makes more sense, which gives more sense to this, right? So basically take a look at what we have here. You have this high and we have this low, CRT high and CRT low, and we were ejecting from the A-shaped key level. So this sends us back to our first episode of A-shaped key level and a CRT candle. Are you following? So you have the A-shaped key level and CRT candle, in the sense that whenever you have a A-shaped key level above your CRT candle, they makes more sense. Not that you're just looking for a random CRT to trade. Like something like this, I'm trying to tell you something like this. Going back to our first video, we're having something like this. This is an A-shaped key level, right? Then after the A-shaped key level, we have this movement we have this level like this. So candle trading very close to it. Not that coming. So candle trading very close to that particular level, some sort of a CRT candle like this, right? So we have this eye. You have this eye serving as a CRT eye. Other high serving as a CRT high, and you have this low serving as a CRT low. So that's low, right? So wherever market is doing, moment market takes out this eye out and add a break of structure inside this level, then you know for you're looking for more cells to clear this to the downside. That's basically what we are looking at here in this present scenario on a daily scale, right, on SZD card. So take a look at this. So basically we've already used our CRT to find the directional bias, and you know we've already see that confirmation already. So now take a look at this. So now this goes back to our MSNR. You know, we use MSNR for our entries, and use CRT for the direction. Basically that's what we do. MSNR for direction, for entries, and CRT for direction, basically. So take a look at what we have here. After we have direct rejection here, price actually traded below the level, like he just sniped it away and add a break of structure here. So here on the daily scale, we already have a daily rejection daily, and we have a break of structure of a daily breakout here already. So we've already had minor breakout already. If you get back to your line chart with markers, you could see them very clear. So you have this minor breakout here, so making it much more valid. Like you have two major break of structures, right? So which makes this much more valid, right? So that's major break. So now let's go to H4 to see if we could see something clear with that. So it's actually on a daily scale. Let's check H4 to see that rejection out. Something not really significant. We only had a rejection in price, and we had another break of structure to the downside, which is these levels. We broke all these levels, all the structures to the downside, right? But mind you, here I said there is something about strength in key levels. The higher the rejection, the stronger the zone. Yeah, whenever you have a zone that sponsor multiple rejection in price and it goes broken to downside, they are very much strong. So this is like a breaker block or like a support broken down resistance model. So you have this SBR model, supports breaking down resistance here, which is very easy here. So you have this multiple rejection in price. Exactly, you have this multiple rejection in price here. You have rejected once, twice, thrice, and 4 times. So something sort of like that. So yeah, if you have to place an entry here, it's going to be in sort of something like this. The SL is going to be above that week. Yeah. It targets all these nearest liquidity level. You have this first one here. This nearest liquidity level. And the third and the last one is that extreme one. But you know, yeah, it's better to move from one liquidity level to another. Yeah, so this is the next liquidity level that we had here because of pullback here. So this is like a 12-hour trade. Yeah, basically I believe in trading from liquidity level to another liquidity level because I know the overall trend is still very much going to get it, but I don't know if there's going to be some sort of a pullback in the course of my trading. So here it's better to move from one liquidity level to another. So after that liquidity level, we see what we had a pullback again to the upside after this. So take a look at that. So here basically see what we did again here. After that, what can you see here? We have series of movements to the upside again. So what do we have? We have a strong high. What's a strong high? A strong high is a high that actually swept the previous high and had the break of structure against the downside. What do I mean? So take a look at this. After we swept this previous low here, we had this movement again to the upside, right? After this, we have to movement to the upside. So if you check your line chart, you could see that we have a strong high already. This is like a strong high here. Take a look at the line chart here. A strong high is like a high that swept previous highs and break structures. Where had the highs I was talking about? We swept this high, and we closed below it. So we have all this here. I was not really paying attention to all these wicks. I said I use my line chart a lot because they help me to filter out a lot of noise. So we had a break of structure again of a major structure. We broke a major structure. We broke the structure here. We broke the structure again as well. This one's here. They even broke the last low. I don't think, yeah, that's a break of structure as well. This is not a sweep, yeah, a break. You see that body actually, the candle body actually closed below it. Can you see? So take a look at this. So if you are trading this, what are you going to look at? You're going to look at the first pullback after that break of structure. How deep does it go? So that break of structure, where is the liquidity for the level? Where is the liquidity for the level? So we have this level. And mind you can actually combine your trend line confluence to this. So what do you have? So you have this increment. So you have this. So you work in alignment with POI that overlaps that trend line, right? Which is this imbalance, which is this the open close key level of that A-shaped key level, right? You can also mark the A-shaped key level also. Right, so take a look at what we have here, and your next liquidity target is going to be this level. So take a look at what we have here. This A-shaped key level again, from that level to this level, placing yourself above this eye. That's another 7-hour trade. So this first trade is actually a 7-hour, second one is a 7-hour trade. So let's take a look at that, like a tapping and dump trades, tapping and dump trades. Take a look at that. So I'm trying to explain how you can actually frame entries on H4 on lower time frame after getting your directional buyer from higher time frames. So these are the things I'm trying to explain to you in this concept, in this call. So in this session rather, I don't want the whole thing to just get very long and very lengthy. So a lot of things will be discussed and you will end up paying attention to the little part of it. So here, pay attention to what we have here. We have this. After that, we have that daily ejection, H4 confirmation with double breakout, a continuation entry model, a ABC pattern entry model with alignment to trend line. So pay attention to this. Go back to your chart and backtest this a lot. Go back to your chart and backtest them a lot. Trust me, you will see charts differently. You see them differently. Like you'll be like, oh, what's this? What's going on here? You see them differently, basically. And use your line chart a lot. Use your line chart a lot, because if you're not familiar with your line chart, you will get confused with weeks of candlestick. Exactly. So you get confused with we get confused with weeks of candlesticks. So take a look at that. Let me still show you something earlier on that happened that last week. I'm coming on this name NZD card. NZD card is actually a very nice way to trade. I'm not lie to you. So what do you have here? We have a CRT candle as well here. You have this upper close key level. You have this upper close key level, right? Take a look at this. I said it's ideal to use a bullish candle as a pullback in a bearish scenario. If you had used this level as your pullback, this rejection will have taken you out. Whatever sales you are marking is going to be very invalid. So using this high as a liquidity for that open close, as a CRT high for that open close level is an ideal one to talk about. So take a look at what we have here. This high and this low again. It's like a CRT again on a weekly scale. Can you guys pay attention to what I'm trying to say? So this is under CRT as well. So let's go to the daily time frame to see if you can see something nice from it. So take a look at what we have here. So this is the daily high, that CRT high, and this is the upper close level we're rejecting from, right? So this is CRT low. Yeah, can we look at entries? So let's go to H4 to see. H4 gives us something nice, and I would like you to pay attention to what I'm trying to say. So take a look at what we have here. We have the CRT high here. After the CRT high, what do you have here? We have a major break of structure, which is all this, right? Which is all this. We broke the structure here, and we will break this. So after that break of structure, what do you have? We had an invalidated A-shaped key level that sponsored a rejection to the upside, right? And we had an imbalance formed here already, so which makes more sense, right? You have this imbalance from this high to this high, right? So is there any key level overlapping the imbalance? Yes, there is. We have this A-shaped key level, the distributed A-shaped key level here, and we have these V-shaped key levels, which makes more sense, right? So take a look at that. So, and I said there is high tendency that you use POIs that are very close to your liquidity, because so that you can actually avoid missed entries. So take a look at this. So if you have to take a sell from here, it's going to be something like this. From that distributed A-shaped key level, yeah, your SL is going to be above this whole imbalance of a thing, so that you'll be protected, and you have this, and your target is going to be this level. Take a look at how we frame that. This is like from a weekly CRT level. Take a look at that. Just take a look at this. So these things are not really complicated, and they are not really patterns. They are just logic. You are trading logic, basically. Just trading logic, basically. So pay attention to little details of price, and pay attention to how they react and how they reject in price actions. So here, it's been a very long time, and I think I'll be joining the curtain for today. And thanks for watching to this moment in time rather. And I'll see you in the next video. And I do well to like and subscribe to my channel and turn on notifications for more content like this. So you are all my MVPs. Thanks for staying around, and thanks for staying tuned. Bye.